morning to you. And
Morning.
you're moving. Are you on a treadmill?
I can walk and talk. The only thing I'm not doing is chewing gum. I'm on my treadmill.
Did your board member, Elon Musk, tell you to do this, put you up to this, be more creative as a CEO?
No. I have a treadmill desk. I walk every morning. They're on the desk, so I thought I would do it with you.
Why not exercise and be on CNBC? Okay, let's start. Let's talk about the quarter. And I want to start with the broader media landscape, where we have seen major consolidation during your first quarter as a public market CEO. How can that kind of consolidation, the big getting bigger, be good for a company like Endeavor that makes its money through talent and streaming and broadcast rights?
Well, listen, Warner, Discovery, Amazon, MGM, in our opinion, it's just further proof that content in all forms, TV, movies, live sports, is in high demand and in short supply. The tech leaders, the incumbent media companies have to power their SVODs and AVODs, and also they have to defend their linear channels. There's going to be more demand, and there's a finite number of people that create IP. And we sit in a place where we represent people, we create IP, we represent sports, we own sports. It puts us in a great position for growth.
Right, but it doesn't change the fact that you are still seeing fewer and bigger players doing more content. So how does that, along with trends that we're seeing like shorter theatrical windows, how does that not shift the bargaining power out of your favor and into theirs?
You have 7 big players in the media space, plus the linear players having to defend, plus build SVODs. And content is more important than ever. And there's a finite number of people that create content. All of them vying for premium content. Prices are going up across the board. The window issue is a different conversation. We haven't hit the bottom yet of what the windowing situation is. If you saw this past weekend, Disney did day and date with their SVOD service and theatrical. Paramount went just directly to it. We'll figure out what the bottom is on that with regard to the windowing. But the economics for talent is going up as all these guys bid for premium content to drive eyeballs to their services.
So, Ari, do you think that we'll continue to see more consolidation? Would that continue to be good for your business? Or is there a point at which you would lose some of that bargaining power?
I don't think we're going to lose some of the bargaining power. We're the biggest player in the space, whether it be content, movies, television, podcasts, sports rights. We own or represent on both sides of the transaction. I don't think we're going to lose any power. I think we're actually just gaining power. From the origins of this company, distribution was going to be expanding. It still is expanding, even with this little consolidation in the SVOD services. When I started the business, it was 4 networks and a couple dozen cable channels. It's only expanded. It's going to continue to expand. That means, and there's a finite number of people that create content and IP rights. So I only think that those prices are going to be going up for the content creators and the IP owners.
We will see. I do want to talk about UFC because it strikes me that Endeavor has this young, active, enthusiastic fan base in the UFC. I wonder, how closely are you watching what Adam Aron is doing over at AMC? Have you thought to yourself, what if you could turn UFC fans into investors? What that would do for not just the stock price, which I know is shorter term, but the business long term, if you could raise capital on the back of it?
Well, listen, here's what I would say. We've had long-term investors throughout our business, whether it be Silver Lake, Mubadala, CPP, Dell, et cetera. We're a long-term player. If you think media and the growth in media is a long-term bet, which we do, we think we're well positioned. Whether they're short-term investors, if there's fans of the UFC that want to be investors and be a long-term player, great. If they want to be a short-term, I'm not going to comment on that. We are here for the long term. We think the media space is a great bet for growth, and we think we're in every growth sector in the media space. And the UFC for sure is a great growth company in business.